Hello everybody, welcome back. Let's have a look at Bitcoin. We're just going to focus on Bitcoin on this video because I'm doing the whole live stream for Patreon members tonight, so we'll look at lots of other altcoins out there. And to be honest with you, yeah, I say it all the time, no altcoin is created equal, so it is worth looking at their charts, especially against Bitcoin pairs. So this is the deal with Bitcoin. From what I've been seeing now, the way I'm feeling it right now is that yeah, we are coming up quite fast and quite strong to retest and try and reclaim this 200 exponential. This is a really big deal to get above that, because every day that we're below it, we run the risk of inevitably creating a death cross, which would spark what would be considered a bear market, or a potential bear market. I mean, we've come down below it previously, and if we come down at this trajectory, roughly speaking, this isn't really the way to measure it, because if we do dig deeper, then this will speed up the process. If we go higher, then it'll slow it down. But more or less, the apex of this, we're looking around, well, about 3 weeks from now before we get that death cross, roughly speaking. But again, that's we've still got plenty of time to avoid it. That's probably the best way to say it. So breaking above there and holding above there would avoid that. But as you can see, for the last 2 days in a row so far, we've come up to be rejected from it, and that's also that should be expected, especially after such a big deep dive down. And then a phenomenal bounce back up. To be rejected from there, it's a 41% move. That is a really big deal, and so far so good, I would say, definitely. Now, also, I would also say that every day that we hold above and close candle bodies above 38,400, more or less, which is I suppose a very strong support zone, or should be, breaking down below there and closing below there would offer up potentially back down to this green 50, which is at 33,500, or potentially even making a new low of around about 28 or 29,000. So again, every day that we're above that 39,000 area is a good day, and it offers that opportunity to use as a base for where we can hopefully probably just reaccumulate, maybe for a little bit of time, just a tiny bit more time below this 200 exponential before we can actually break above it, flip it to support. That's what I would imagine. I would imagine seeing that, to be honest. Not just a break above. You might have an aggressive break above and then come back down to test it, prove that it is an actual support at this point, and not just a fake out or a bull trap. So that's Bitcoin more or less on the daily. On the 4 hour, there is glimmers of hope. If we're using the RSI, what we see is there's a double bottom area here, suggesting that this is in many ways we could view this as potential bullish divergence. I would expect, as we can see on the 4 hourly, the center of this Bollinger Band is currently a rejection zone. We are coming up to test it quite effectively, really. Usually the more times you test a resistance, or the more times you test a support, the more likely it is to break. So it's looking pretty strong, but it wouldn't surprise me, given the way that the chart is, which is effectively in a downtrend, speeding up as well as we go. We've got a new death cross here, so we'll measure the price action so far from there to there. 45%, currently 25%, and from candle to candle about 32%, which is normally what you'd expect to see, roughly, give or take, after a death cross on a 4 hourly. That's pretty much a standard sort of move, and perhaps maybe that has played out for what that cross is worth. But the trend is it is still strengthening. We after this bounce, I mean, it's slowing down a little bit. So it wouldn't surprise me if we retest and maybe wick a little bit below these zones here before we do have a bit more of a move with a bit more conviction to break above that 200 exponential. And that also, if we get a lower candle body close, or just another wick below, I suppose, that candle, or maybe even this wick with a higher low on this RSI, then that might be the area for maybe a potential long for me. Now, I don't use derivatives much, but I like the way that this is shaping up at the moment. It does look like the downtrend is slowing down now, and it might offer up some opportunities. But again, derivatives, especially in this sort of vibe, is pretty dangerous anyway, because we're not in an uptrend. So I'm really looking to try and catch a bottom. And even if we did catch that bottom, I don't think it's going to be as aggressive a buyback as the things that we've seen recently. Where we dip down and then we shoot back up, dip down, shoot back up, dip down. And I suppose we shoot back up again. Now we could obviously do that, and I'm prepared to try it. And like I say, it all depends on the state of the RSI on the 4 hourly. I do think that the downtrend is slowing down now, and even if we don't go into an uptrend from here, we may just reaccumulate, provided we can reaccumulate above this 200 exponential. That would offer up the power throughout, some point over the next few months, I would imagine, to actually have a new launch pad to then go on and make new all-time highs again. For the moment, we can't really talk about new all-time highs based on this chart right now, because it is in a downtrend still, and every day that we're below the 200 exponential makes it worse, because we have no moving averages on this daily which are below us. There is no there is no more moving averages below us, which means that every day that we're below them, the downtrend potentially will speed up pace or will offer up more downside over time. So we do need to start to reclaim these, but I'm not in any particular massive rush to do it. We have to accept that this was a crash and this was a 40% bounce so far, and when you have price action like that, I mean, if you're running bots, then that's great. My bots have done really well throughout this, and provided that the market recovers, which I'm and no doubt that it will eventually recover, I will come out on top, and those bots will have done their jobs perfectly. But if you're holding on for just holding your coins or holding your spot, then yeah, I mean, we're not looking for anything particularly exciting anytime soon. The excitement has already been had, the excitement down and the excitement for the bounce back up. So now we've found a kind of a middle ground. I would be happy to retest areas below 38,000 just as a wick, perhaps, maybe down to around 35, 36, thereabouts, and then hopefully we'll catch our bounce there. That should mark a potential bottom, an actual bottom. But again, there's every day that we're below this 200 exponential, there could always be further downside, and there could always be more to go. So there's two things that we're waiting for. First of all, I kind of do expect a test of these kind of lows, 35, 36, and then eventually, shortly, not too long after that, make a conscious effort to break above this 200 exponential, test it as a support, and then go into either an accumulation phase, which is most likely, and that's what I would prefer to see anyway. I'd prefer to see an accumulation at this kind of level for a period of months, really. I would much prefer that. Sideways and up, maybe sideways and down, or just general sideways. I mean, accumulation, if we think about what this could mean, we could accumulate anywhere from as low as between 38,500 to as much as about just short of 50,000. This zone could be the accumulation area, and that's what we could be looking at. And that could take months, that could take us right through the summer. And that would also be fine, that would be fine. I would prefer to see something like that, where people can really sort of build upon their positions for the inevitable bigger move back up, than us just essentially making a V-shaped recovery. So yeah, at the moment there is definitely potential downside. The daily chart is sad. The 4 hourly is offering a glimmer of hope, but on every time frame we are pretty bearish. So yeah. But given the way that this has been, this literally tells a story. With this giant wick, even from candle body to candle body, it's a 21% buyback, and it happened extremely fast. There's still a lot of buying pressure in this market right now, which signifies to me that this technically was oversold. This crash was what it was, and if we go back and see similar kind of things in the past, the only other thing we've got close to that really is this death wick from March COVID times, and yeah, if we see the way that this behaved, and again, it's a different situation here. It's a definite different situation. But if we have a look at how this behaved, a huge mega wick, an enormous buyback, retest of kind of similar to the lows, and then actually finding our way, back into an uptrend, and the uptrend really sort of began to take form. You could argue when we reclaimed the centre of this Bollinger Band, which was around 6,000. But then really picked up pace and became more aggressive when we finally got back above the 200 exponential, which then finally golden crossed. And it's not the cross that means it's not the cross. I always say this: the cross isn't the signal. The cross just shows, okay, we're catching our feet now. We are going to start hopefully to build upon this, because you see, we got the golden cross and we were pretty much flat for a while around 10,000. It even came down to to test around 9,000. wicks down at into the upper 8,000s. So the cross isn't this is what I always say, the cross isn't the signal. The cross is more confidence that something better is around the corner shortly, and it was. And since that golden cross, we have been diverging ever since. It's only recently that we've only really had a negative slope of this size, really. And again, there's no death cross here, not yet anyway. But I would expect a retest of the lows, maybe mid 30,000s, upper to mid 30,000s, and then from there an accumulation that should begin thereafter, with potential highs of around about 49,000 to potential lows of back down to 38,600, and this could go on for a prolonged period of time, boring the pants off everybody. And what that will do to altcoins is unclear at the moment. It is unclear. Normally, when Bitcoin goes sideways, it often offers opportunities for altcoins, and so there is a chance that altcoins will end up recovering and going on to make new rallies again at that stage. But until we start to see some more strength in altcoins generally across the board, then it is a matter of judging every altcoin by its chart. And we were looking at some of these over the last few nights. So we've done live streams every other night recently, but we'll be doing them again tonight. And we are going to judge, if possible, all altcoins against their Bitcoin pairing, because that's how we're going to gauge the majority of the strength behind these altcoins. We want to see how overbought, how oversold, how overextended, how constructive the charts are, if there's any signals on the weeklies or the dailies, or maybe even just the 4-hourlies. We want to judge all of those things independently and not think about altcoins as one whole giant thing, because they're all very different. Some have got good setups, some have finished their good setups and are consolidating. So there's a number of different ways we can look at these things, and we do have to look at them individually. So if we do go sideways in an accumulation phase for Bitcoin, I think some alts will benefit greatly, the ones with the best setups. But if some of those alts are already overextended and they're consolidating, then that is likely what they will continue to do. They will likely to consolidate. So it's not, we can't tie everything with the same brush. We do have to look at everything separately, which is what we'll be doing tonight. And if you want to join that Patreon, there's a link in the description below, and I'll leave it with you there. But thank you. Have a nice day if you can. Like I say, it's that we're not out of the woods yet, and take it easy.